Hi everyone, welcome to JAIIB CIB English Medium. My name is Aarti and I hope you all are doing good. So as you know, we have already started one very important series in which we are discussing about your ABFM, ABM, all your compulsory subjects, correct? So what you can do, you can subscribe to our channels because through this you can do your daily revisions, correct? Though you are reading concepts, you are understanding them, you are doing the self revision, but unless and until you are not solving MCQs, you are not attempting exam pattern questions, then it won't help you in a long term. Correct? So you can subscribe to our channel, you can share this particular series with your colleagues, with your friends who are also planning for CIB June 2025. And apart from this, you can do one more thing. Right now, if you're watching live, then you can like this session and you can do the revision afterwards also. But if you're not watching this live, you're watching in a recorded session, remember what you can do. You can like this and you can store in your live section. Okay, so that whenever you want to revise your ABFM subject, ABM subject, any subject, you just need to open your live storage section. You don't require any time for searching. Okay, you can save your time like that. Chaliye. So let's start today's session, and what you all need to do, you need to read it, you need to understand the question, and you need to tell me the answers. Okay, chaliye. So let's start today's session. The very first question is select the statement that best differentiates personal observation from budgetary control. Under your module A, we have seen total theory part. Hana, in the last unit talks about controlling. We have traditional controlling, we have modern controlling. Okay, so under that we have different techniques based on these two classifications. So this question is based on your traditional techniques where we have seen personal observations and budgetary control. So personal observation means where your managers, they are directly looking into you, that what you are doing, when you are punching in, when you are punching out, what your work is. They are directly looking towards your work. That is what personally when they are observing. Correct? On the other hand, budgetary control means whatever they have decided, whatever they have estimated, if that is different from actual, then how to control it. That is what budgetary control means. Okay, now we have four options. Let's read. A, personal observation is focused on employee supervision, while budgetary control is focused on financial performance. B, personal observation and budgetary control both primarily focus on financial data. C, budgetary control replaces the need for direct employee supervision. And D, personal observation and budgetary control are identical processes. They both are not identical. First of all, they both are not identical, so you can eliminate option D. Then let's talk about option C, that says budgetary control replaces the need for direct employee supervision. No, supervision towards employee is something different and budgetary control is something different. So this is not your correct option. Then let's read option B. Personal observation and budgetary control both primarily focus on financial data. No, personal observations look towards your employee, what they are doing. You are observing them personally, how they are behaving in the organization, they are ethically or not, they are following the rules and guidelines or not. That is what personal observation will talk about. In that we are not never assuming this financial data. Okay, we are controlling, we are understanding your employees. Through that we are observing. So that is not similar to your budgetary control. So as per this, your option B is also wrong. Now let's read option A. Personal observation is focused on employee supervision. Yes, that is true. This statement is true. Now let's read the next half, which says budgetary control is focused on financial performance. So this is about your correct bifurcation or differentiation between personal observation and budgetary control. Okay, so the correct answer is option A. Answer equal to A. Chaliye, coming to next question. A company's stock is trading at rupees 300 and its PE ratio is 15. If the company's EPS increases to 25, what will be the new stock price assuming the PE ratio remains constant? Now this question is a numerical question. So I would like from each and everyone to attempt this and share your answer. In exams they can ask this type of pattern also. This pattern is your without option question. Okay, they can ask this also. So remember, we need to prepare as per your exam pattern only. So first one we have seen as a MCQ pattern. Next we are seeing without option question. Chaliye, so let's solve this together. So first let's write the PE formula. PE formula is what? PE formula is your market price divided by earning per share, isn't it? This is your formula. What are the things they have given? Company stock is trading at 300. Okay. So current market price, let's write it as MPC. C means your current price. That is your 300. Okay. And the next thing is PE ratio is 15. PE ratio is given as 15. Okay. If the company's EPS increases to 25. Okay. So now this is the first situation. This is the first case. This is the basic case they have given. But second case on the other hand, they are saying that your EPS increases. Your EPS increases to 25. And then you need to recalculate your new market price. You need to recalculate your new market price. That is what they want from this particular question. So what we can do, already they have given your new EPS, new EPS. That is increases to 25. Increases by 25, no. By 25 means we need to add it. 225 means our final new EPS is what? Your new EPS is your 25. So what we can do, we can directly use this formula, that is PE equal to MP divided by EPS, because being your PE constant, we are going to use the same PE ratio. Chaliye, so let's use the data, that is 15 equal to new MPS we want divided by 25. So if I multiply this, 25 into 15, this will give me rupees 375. So this is the answer. This is my new MPS. That is the required answer in this question. Okay. So remember PE formula. PE formula means price to earning formula. That is your MPS, your market price share divided by earning per share. That talks about PE ratio. How much you are earning as per your income statement, and that same share at what price that is traded in a stock market. That is what MPS talks about. Okay, chaliye. Now coming to the next question. Which of the following approaches can be used for the valuation of intangible assets such as brands and human capital? Option A, relative valuation. B, capital investment approach. C, both A and B. D, only relative valuation, not capital investment. Chaliye, tell me. Now in this question they are asking how you can value your special cases. We have a special unit under your module C, that is your special cases. In that the first topic is only your intangible assets. Now why we are considering this intangible assets as your special case? First let me tell you what are intangibles. Intangibles are like your patents, like your brands. Okay? We have human capital, we have goodwill. So all these are considered as your intangible assets. Now why they are considered as special cases, let me tell you the reason. Because when you want to compare or when you want to value any tangible asset, like if I want to sell my car, I can easily value that car, है ना? Whatever I want to value it with the charging of depreciation, with the market price, I have each and every information. Through that I can value my car. Means easily I can value any intangible assets. But the difficulty arises whenever I am holding any intangibles. For the intangibles, we don't have much information. Though when you are purchasing it, you are paying something, so then you can value it. But what about like brand value? What about like your loyalty value? That generates through the time. Correct? No one can value any company's brand value. No one can value goodwill easily. When you are doing amalgamation, at that time whatever amount you are paying, through that you calculate the goodwill. But if anyone asks you that what is the value of your brand value, no one can tell it. So that is why it is a special case. But if anyone asks you that what is the value of your car, you can tell it easily. Because we have market for that car, we have some physical existence of that car. So by that you can value easily any tangible assets, but the difficulty arises in case of this intangible assets. So under this unit special cases, we have the intangible units topic. Under that we have seen we have three approaches for valuation. Okay, number one is your capital investment. Then we have the next one is your discounted cash flow model, and the last one is your relative valuation. Now, capital investment means at the time of purchasing how much you have paid. By adding that amount, you are going to tell the amount of that investment. That is what capital investment is. Okay? Suppose I purchase patent, so I have to pay some amount like rupees 50,000, so I can value it. Or if I am taking some registration of this patents, so I will pay registration fees. So that is what? That is again what? Amount that is flowing, that I am investing for acquiring these assets. So I can value through this approach any intangible asset. If you are not acquiring them, if you are not purchasing them, then what you can do, you can use discounted cash flow valuation. Means by acquiring that intangible assets, how much cash in future you are going to generate, and by taking their present value, you can calculate their true worth. This is the second approach. Now the third approach is when you don't have relative information, when you don't have required information, then what you can do, you can see the relative transaction in the market. Okay, recent transaction. Suppose I have one patent, and I didn't pay any amount for acquiring this. Okay, I cannot assume how much I am going to generate from this patent. But there is company B who has recently purchased these patents from the market. Okay, same features, same kind of patent, everything is similar. That will benefit it same for them also, for me also. So whatever they have paid for acquiring that patents, I will use that same amount for my patent. So that is what relative valuation. Okay, so intangible assets approaches, we have three approaches under intangible assets we have. Number one, capital investment, discounted cash flow valuation, and relative valuation. Then next is which of the following. Okay, so let's solve this now. Which of the following approaches can be used for the valuation of intangibles such as brands and human capitals? So number one, relative valuation. Of course we can use it. Capital investment approach, of course we can use it. And your last approach is what? Discounted cash flow. Though they are not giving that, but we can use that also for valuing any intangible assets. Correct? So the correct answer is both A and B. D says only relative valuation, not capital investment. This is your wrong statement. This is also correct. This is also correct. But the exact required answer is both A and B. So the correct answer is option C. Chali, coming to the next question. Now, a company has a retention ratio of 60% and return on equity, that is ROE, of 15%. What is the expected earning share growth rate? Everyone, again, this is your numerical question. Please take your time and solve this. Again, this is without option question. Everyone, try to solve this question. Chaliye, so what are the given data we have? We have retention ratio. Okay, that is equal to 60%. Then we have return on equity, ROE, equal to 15%. Okay, what is the expected earnings per share growth rate? So basically, what is our formula for your earnings? Expected earnings per share growth rate. Okay, so expected earning growth formula is what? That is your retention ratio into ROE. Retention ratio into ROE. So what is your retention ratio? That is your 0.60 into ROE is equal to 15%. So your answer is 0.6 into 15%. So your expected earning growth rate is equal to 9%. This is your expected growth rate. Now my next question for each and everyone is, answer for this question is 9%. Okay, now the next question. You need to tell me the answer for dividend payout. You need to tell me what is the dividend payout ratio. I want your answers through comments. If you know it, then please share it. Okay, because this is how you can get the confidence that we are able to solve this type of questions. So if in exam they will ask this type of questions, you are going to solve it. Okay, so please everyone, take this on a serious note, try to solve it and share your answers through the comments. Let's check it out, how many of you know this, how to calculate dividend payout ratio with the given data. Chali, coming to the next question now. So this is the formula. Okay, expected growth, EPS is what? Retention ratio into ROE. Next, sensitivity analysis is useful in decision making because it shows the probabilities associated with each outcome. B, it tells the user how much critical each input is for the output value. C, it allows to calculate the probable results under different scenarios. D, the results of sensitivity analysis are reliable. Tell me, which sensitivity analysis is useful in decision making? Because it tells user how critical each input is for output value. Under sensitivity analysis, we give the effect of changes in each of the factors. That is what sensitivity analysis talks about. First, we give the effect to our sales. What if worst case is there? Then we give the effect to our variable cost, then fixed cost, then units. So how every time when there is an effect in each or any unit, how it will affect. So that is what your sensitivity analysis talks about. Correct answer is your option B. Now, a company's sales increase by 10% and as a result EBIT increases by 25%. What is the degree of operating leverage? Now again numerical. Today we have one theory, one numerical. One theory, one numerical. So that you can get the confidence over this numerical part also. Chali, tell me. you need to calculate DOL 1.5 to 2.53, which is your right option. So this is your formula that you need to use, that is percentage change in EBIT divided by percentage change in sales. So already a company's sales increases by 10%. So that is what? That is your 10%, and as a result EBIT increases by 25%. So there is a change in your EBIT, that is your 25%. And if you calculate it, you're going to tell me the answer. Please tell me. 25 divided by 10. Your answer is what? Answer C. Okay. Chaliye. Next. Which of the following best describes the difference between retained and contingency recruiting? Under your module A, you have a unit related to your staffing. That is related to your types of recruitment. We have so many types of recruitment, like we have internal recruitment, retained recruiting, okay, contingency recruiting. So in this, you need to identify which option defines the difference between this retained and contingency recruiting. So retained recruiting means what? Retained recruiting means, suppose this is A company. Okay. A company wants few employees. Okay. So now A company will appoint this recruiting firm. A company will appoint this recruiting firm, and this recruiting firm will look for that eligible candidates. Okay. And for this, A company pays the upfront fee. Upfront fees. That is what? Retained recruiting. Now in case of contingency recruiting, again we have B company. Okay, again we have company, and again now we have recruiting firm. B company informs to this recruiting firm that now they want some eligible candidates for this XYZ position. So what a recruiting firm will do? Recruiting firm will send so many eligible candidates detail, and if B company appoints those or any one of them, if the B company appoints any one of the candidate, then only recruiting firm will get the fees. Otherwise, there will be no transaction. That is difference between retained and contingency. Under retained, you are going to pay every time, whether you appoint it or whether you reject it. But under contingency, only when you are appointing the candidate, then only you are going to pay the fee. That is the difference. Now let's read. Retained recruiting is lower level jobs, while contingency recruiting is for executives. Okay. B, retained recruiting requires an upfront fee, while contingency recruiting is paid only on successful hire. We like this point. C, contingency recruiting requires an upfront fee, while retained recruiting does not. Okay, incomplete. Retained recruiting is only for contract-based jobs, while contingency recruiting is for full-time jobs. So as you can see, all are not correct answer, like A, B and A, C and D. Only the correct answer is option B. That defines the difference between retained and contingency recruiting in a correct format. So that is how we need to solve the theory questions. Chali. Now this question is your practice question. Okay, this is your practice question. So today I gave two practice questions. One is this exact question, and the previous one is your, you need to tell me the answer for this dividend payout ratio. Okay, you need to tell me the answer for this dividend payout ratio. Now, for those candidates, if you have done with your registration and if you are just watching this series, then it is okay. But if you are not comfortable, if you are not aware with your concepts, then clearing your exam in your first attempt won't be possible for you. Okay, so we have already launched batches that you can use for your concept building. So how you can enroll in our batches? You can visit to Adda 24/7, all courses JIB, CIB, JIB May 2025. Here you can see our crash courses. I'm so sorry, this is our JIB. I'm so sorry. For CIB, you need to visit to CIB June 2025, and this Selection Pro batch is your bilingual batch, and this is your Selection Pro batch that is based on English medium. Okay, you need to click on this batch, and you need to use one coupon code if you want to buy this. That coupon code is Y895, because with this coupon code only you are going to receive this 80% off. In this batch, we are going to provide you the live classes, recordings also, notes also, mock test also, or self-study notes, so that you can do your continuous revision. So if your target is to clear in June 2025, then this is the batch. Use this batch for your concept building. Use this series for better confidence. Chali. So remember, you can use Y895 for purchasing this batch, Mahapacks, for any batches if you want to enroll. Y895 will give you the maximum discount. And remember, if you purchase the same batches from other 24/7 application, you can increase this discount up to 81%. So that's it for the day. Thank you everyone for joining. Take care and bye-bye.